Hello, everybody. Thank you for coming to the first panel of this afternoon. So we got four very distinguished guests speaking on a fascinating topic about early stage investments. Obviously, a lot is happening in the tech world as well as new investment. Just a brief introduction. Manav with Brinc, and then He Zong was with GlobalBrain, and then two stars, Liu Zong and Oscar with SOSV. And I'm just gonna cut to the chase to really kind of dissect the whole investment world these days when it comes to early stage investment, right? So I guess what we can say for sure that there's a lot of uncertainty in today's investment world when it comes to tech and all that, and then we see a lot of interest rate risks as well as some of the geopolitical tensions and all that, right? But then I guess at a high level, how would you guys kind of characterize today's early stage investment for the early stage investment landscape? Let's probably start with Oscar.
I'll say that, well, for us, we maintain our level of activity. So we're very early stage investor, investing globally, multi-industry, multi-technology. So we have I'll say good visibility on what's going on everywhere. And I'll say there's two words that define what's the current early stage landscape. The first one is slow. Everything is very slow. Every decision takes longer than it used to take, and communication sometimes is very, very tough for funders. So whatever you're doing, you need to plan and assume that everything's going to take twice longer than it normally takes, and you're going to be asked for way more information. And the second thing is that average is becoming less and less relevant. There are big, big differences depending on what part of the world are you, and there are big, big differences depending on what industry you are. Then moving to another region, it's sometimes complicated, although for companies that are thinking about international expansion, they can adjust their plans based on the areas that have more interest for investors. But particularly if you are, whatever you're doing, you might have different angles to explain your company. So it's very important that you consider what industries are currently more active, they have more interest from the investors, and emphasize a bit more these areas that are getting much more attention.
Right. Yeah. Because I'm getting a lot of sense that like these days investment's been slow, but then obviously there's opportunities as well that goes along with that. But yeah, I guess to characterize sort of the investment landscape for early stage, Liu Zong.
Yeah, I would like to say because for us it's kind of special. We have done the early stage investment in China for more than 30 years. So it's because we originated from Tsinghua University. So at the first day, we are kind of different from other PC or VEs. VCs. We need to support the technology-driven. Some of them are professors, some of them are alumni. They want to do the startup, and we give them money to support them to survive long. So, but this kind of early stage investment till now, I think, get more attention in China market. A lot of people are coming to early stage investment. So today, if you want to characterize the early stage investment, I think if I use the word, it's very hot. But as people who have experienced the whole cycle of early stage investment, I would like to suggest that you need to become, because early stage investment, although today is very hot, but it's a long-term value pursue process. So you need to see very long. It is high risk and a long-term business. So not available, not adaptable to everyone. But a lot of people is coming to early stage. So today, if you talk about the trend of early stage investment, people have more attention on technology than ever before. Because in the last 10 years, if you see the trend, they will see some like hard devices, like mobile internet, like more market-driven or more business model-driven companies. But recently, people are really concentrate on the technology that we don't have. So if before you see market-driven companies, and now you will see industry-driven companies, because in a lot of industry that we have a very strong base, we don't have the key technology. So we need the key people, key technology to facilitate the whole industry. So I think it's changing from market-driven to industry-driven recently.
Very interesting perspective. Yeah, I guess because we got a very diverse, panel, and then GlobalBrain, you guys, was it also kind of come in from like a Japanese kind of perspective as well. So I guess, yeah, how do you guys characterize today's early stage investment?
Yeah, to be honest, yeah, so my first trip back to China from Japan as an investor, representing the Japanese institution investor, it was back in 2017. So the landscape at that time and now is quite different. At that time, 2017, people are talking about the money from US, from the Europe, and people are talking about US donor funds, and the characteristics of the US dollar funds are like aggressive and seeking for the financial returns, and people from the startups are seeking for, they are aiming at for example, the IPOs in the United States, NASDAQ, NYSE, but now it's quite different. Especially in the past 3 years, we see a very strong trend that the rise of the RMB fund, especially for the government-backed RMB fund and the SOE-backed RMB fund. And also the characteristics of those funds, I see somehow different from the conventional US dollar funds. Yeah, besides the financial return, there are simultaneously there are purposes that, for example, for the development of the local economy, as well as the aiming for the industrial development. That's somehow different from what I have seen in 2017, 2018. So I think that's one point that I have observed in the past 6 or 7 years.
Right. Yeah, things have certainly changed. Manav, from our beloved Hong Kong and our perspective, looking into the early stage investment these days.
Yes, I'm just trying to think of what else to add on. I think along with what my colleagues have said, from what we've seen, to Oscar's point, it's definitely slowed down. I think a lot of VCs choose to use their dry powder as wet powder now. So it's more of, how do I redeploy with my current companies rather than reinvest in new companies? Because I know the operators, I know they've been able to navigate COVID, for example, which is a very tough time. And if you know the operator, you've been able to see and watch them operate and build a business out over the last couple of years, you feel more confidence. Perhaps they can navigate this macro environment as well. But I think if we look at the opportunity set as opposed to the challenges, at least for us, we think it's a great time to continue to invest in this space. Valuations are down. We're able to get into some fantastic deals at good prices. We're looking at global companies that perhaps are doing flat rounds or discounted rounds because they need capital. There's a lot of companies that are doing primaries and selling secondaries because a couple investors want to exit. So I think we, just like 1980s, 1990s, or even COVID, there was a lot of challenge, but there was also a lot of opportunity. And so I think this is a great time to focus on the fundamentals, find great companies that have perhaps gone through some cycles, or even when you're talking about early stage, find those founders that are not chasing the tech trends, they're actually building real businesses, because this is not about the technology stack, it's about what problem you're solving. And I think last year was Web3, this year's AI, people are jumping back and forth based on trends, but what's more important is what's the problem set. And if this is a problem if this is something as an accelerator, as an incubator, as a VC you care about, then continue to back those founders, because your horizons are longer. Like, we're not waiting for return within 1 to 3 years. We can play the 7 to 10 year game. So we're still going to be just as active, and we're hoping to do another 50 to 75 deals this year.
Cool. Yeah. So I guess we also have like these guys have been doing it for a long time, and I think what I'm also very interested in, and you guys touched on it a little bit. I want to elaborate on it is the changes over the years, right? SOSV have been doing this for a long time, looking into like Chinese startups and startups in this part of the world more broadly. And then I guess over the years, like what are some of the sort of changes that you guys seen has like the most that stand out the most compared to like what's playing out these days?
Well, I'll say particularly right now, building on what Manav was saying, fundamentals have become more relevant. That has become way more important for every single company. Trends and changes, the cycles for any hype are shorter. So the same things like, well, you were a Web3 company, you were able to raise much more because there's a lot of interest in that. Now, if you have like AI in your deck, then you have more chances to have a conversation. But at the end of the day, building a company is not a sprint, it's a marathon. And you need to be able to think about, okay, not just how my company is today, but how my company is going to be 2, 3, 4, 5 years, or even more than that. So I think right now, at the moment that we are, companies are thinking way more about the fundamentals, about unit economics, about how to create real value for stakeholders, and how to make sure that they can sustain themselves without just relying on external capital. I mean, obviously, especially for certain types of companies, especially in the deep tech space, where the barrier to be able to create a product that you can launch to market, where you can actually start charging your customers for that, is going to take longer. But for many other companies, they just have to think about that. They just have to think about these basics of the fact that you're not building technology, you're building a company. And for some of these deep tech companies, they need to start thinking more about, okay, what is the intermediate product that I can take to market? Like in my case, I have a lot of background in healthcare, in medical devices. And human medical devices take a long time to develop and to get like certifications. So a lot of medical device companies that are designed for humans, they might consider other applications for animals or in other industries where they can start proving that the fundamental technology that they have works, that is able to de-risk at least that doubt, that there's an opportunity in the market, and they can use that to continue building a business, not just building a technology. I think that's a very important change that I've seen recently. And particularly on our side, we really welcome very much, because that's kind of like one of the core theses of our investment, that at the end of the day, you need to be building a real business. And companies need capital, but especially what they need are the resources that allow them to build that company and take it to the next level.
Right. And I think because Liu Zong has already kind of talked a bit about how these days has to like companies have to be a whole lot more tech focused, right? So I guess to expand into my ongoing question, so what's the outlook that you guys are looking, that you guys have in mind for like the upcoming years, for like next 5-6 years?
That's a big question because people always ask what's the next trend. I wouldn't like to say, because for us, we focus on early stage, and the most important thing for early stage and the most certain thing in the early stage is people. So you wouldn't like to constrain people what to do in the next 10 years. But we follow the excellent people, and we know about a lot of new technology, and they are changing the whole industry. For example, we care about the first kind of company we care about is about, for example, manufacturing in China has a very strong base, but it needs information technology, needs mobile internet, needs IoT, needs chips to change the whole connection, to make the whole infrastructure or manufacture more smart. So in terms of different industry, there are different technologies, but for the medical devices industry, if you see in China, a lot of companies which lay in this area, they are more doing more things about substitute, about the global leading companies. But first step is substitute in China market, but next step is being the global leaders in the future. So today we are in Macau and in East Union. There are a lot of opportunities for China's new technology companies going abroad later. So we have some companies, they do some technology breakthrough, and they can match into different industry, and they can develop their market at different stage. They can develop their different market at different stage. So it's quite different from before, from US dollars model. Because US dollar models, you must know where is the customer needs, where is the customer demand, and you try to design a product or try to satisfy their demand or needs. But today, we see a lot of technology. They are just trying to be the breakthrough some point. And after that, they can find their market. So it's kind of controversy like before. It's kind of different. So for the future, if we see the industry, we look at the new materials, some robots, and something that can utilize the new technology into a very existing or big market. So we would like to come down to the essence of business, where we can create more value. We can be more cost effective. So this is what we see. But to your questions, I think the most essence is about people. People is the certainty of the whole business life.
Right. Thank you for that. And so He Zong, any sort of big changes really stand out, or like outlook for what's gonna happen?
Yeah, sure. Talking about GlobalBrain. GlobalBrain is a global company. We have offices in all around the world, in the U.S., in London, in Berlin. In Asia, we have an office in Tokyo, in Singapore, in Jakarta, and of course in Shanghai. So when we talk about our investment focus or the trend we see in China, our understanding is, of course, definitely for the deep technology. Deep technology is the because we see some still there are quite a few opportunity. For example, the business model innovation in the market of, for example, India, for example, in SEA, and in some other countries. But in China, we see the trend has been transformed from the business model innovation to the technology innovation, definitely in the past 2 or 3 years at least. So when we talk about the deep tech focus, we see some good advantages in the China market, especially for the Chinese startups. For example, in the field of robotics, we had 2 investments in China in the last year, and also in the field of like the retail technology, as well as in the field of metaverse. For example, the metaverse in industries such as the digital twin. We also had investment in last year in China. So that's the big trend we see from the stance of the startup. On the other side, from the point of view of venture capital, just now I mentioned about the transition from the US dollar fund to the RMB fund. And I also see the the competition, especially in the early stage venture investment, is getting more and more competitive, I have to say. So before you are an investor, you come to the founder of a startup, you provide some money, you provide some advice, and you provide some connection to other investor. That's somehow enough, I think, in several years ago, but for now, it's definitely not enough. It's not only about the money, it's not only about the PR, it's not only about the connections. The real resource that venture capital can provide to the startup is quite important, based on the understanding of ours.
Thank you. Yeah, Manav, so important changes that or like your outlook for the next couple of years.
Maybe I'll add on 3 more to what everyone else has already spoken about. So I think localization is going to be more and more important because geopolitics don't seem to be slowing down in any form or manner. So as a result, I think if you're playing, for example, in the data space, in a regulated space, in the chipset space, you will probably focus on your local market. You will most likely raise local capital. You will most likely look at your local partners and collaborators versus trying to think globally in certain categories. So I think that's a trend that's probably going to continue to grow. I think number 2, I think we're going to see more money move to early stage because the late stage market has completely fallen off. There's no path to liquidity. There's no clear directive, right now in terms of which markets can give you an exit, apart from maybe secondary funds and so forth. So a lot of growth stage investors are struggling at the moment trying to figure out what's the right path. But I think early stage, you still have enough of a horizon. There's enough time where you can invest early and kind of get a longer term yield. So I think that's perhaps one that we will see more money move in early stage. And then I think third, which is the topic of the hour, topic of our decade, probably most important thing in our lifetime, is focusing more on sustainability, looking at the categories that have climate as an umbrella. I think the biggest issue right now is there's no unified metrics for how you measure company A against company B in terms of their carbon reduction, their decarbonization potential, their carbon neutrality. So I think there's going to be more unified KPIs that the industry will create and will have to be adopted. We're doing a lot of this kind of stuff internally to make sure that all the teams, from a selection all the way out to how we educate them to how we ask them to report, are speaking the same language. So I think that's going to be a very important trend. There'll be a lot more capital that goes into that just because it is the most important thing for us all to be working on over the next decade. And China's got their 2060 goals. Hong Kong has their 2030 goals. India has their 2030, 2040 goals. Everyone's got very clear pledges. And now we have to back into them and see how we get there. And I think solutioning with startups is going to play a big role in that.
Cool. Yeah, those are very interesting insights, and probably somebody should take some notes about that. Because we know that things are slow, but then also very interesting and disruptive technology like AI that's on everybody's lips these days, right? So we need to get into that. So I guess, but also, I guess in addition to AI, maybe there's some other tech that you guys are focusing on, and maybe you guys also can expand on that. But so just basically disruptive tech, and then how is it affecting early stage investment? Is it sort of speeding up the cycle, or is it actually slowing down the cycle? Is it a long cycle, a short cycle? Maybe you guys can comment on that. Let's start with that end of the floor.
I think it's definitely very exciting. I've never seen anything like this speed of innovation in my lifetime, and it's very exciting to watch it and try and be involved. We are launching an AI-focused accelerator. We acquired an AI portfolio of about 50 companies 4 years ago, and we've got about 8 winners there. So we're continuing to work with them, and we're excited to support the category. It's a horizontal, so it's not a vertical. There's a lot of scope. Only, I guess, word of caution is it's a very tough space. It's very competitive, and it's not easy to necessarily pull it off. So I think we're seeing a lot of founders get excited by it, investors, obviously, because there's more capital flowing into it. But it's the tech, the team, the talent is hard to bring together. So unless there's a clear edge, or you're building a wrapper on Open, GPT, or there's a very clear use case, I think founders have to really contemplate how they have an edge. It's just become more in the limelight as a result of the more mass market tools that make it easier to understand and utilize. But people have been working on this for a very long time with incredible, deep technical talent. So I think we're bullish on certain use cases and applications where there's proprietary data. We're excited about certain industries where you have the potential to disrupt through AI. I would avoid regulated industries where, like, if you're going into finance, using AI in finance and trying to tackle that, you almost are playing the reg tech game more than the AI game. So I think choosing the right industry, figuring out what your approach is very important.
Right. He Zong, anything on these kind of new disruptive tech and then how it may change cycles and such?
Yeah, sure. It's quite excited to be in the venture capital industry at this time, especially when we see the exciting outcomes of the AIs. But to be honest, really honest, that it's very difficult for me or for our firm to see a clear picture about the AI. Even I asked the ChatGPT how about it. There was no clear answer as well. So that's a very big problem. There are some good references or benchmarks regarding to this topic. There are big names says that AI is not good for startups. There are big names in China talk about that. There are also big names in the industry said AI now we're at the iPhone moment. So if we take iPhone moment as a benchmark, we can see like the LLMs, for example GPT, and also the models that Chinese company created. We can see that may be the app stores. If we compare to, if we take the iPhone as an example, and there are a lot of startups. They are creating add-ons or plugins based on the big models. If we benchmark the iPhone, those things are the apps in the app stores. So for the startups, there are two strategies. One is to create a new app store, a new LLM, or you focus on creating new apps. So the strategy is totally different. And there is a tricky point at this is App Store at this moment, even the GPT model and all the other models, they are evolving all the time. And sometimes they just change fundamentally. So even you build something based on the model, but then it changed a lot. All you did just got no ground. So at this moment, for our investment in AI field, we need more time to study and understand the industry, understand the trend, and then put our chips on the startups.
Gotcha. Thank you. Yeah. So from TusStar's perspective, disruptive, technology. How do you guys kind of capitalizing on those opportunities?
Talking about ChatGPT or AI or disrupt technology, I'm not sure I can express myself in English very well. So because I see there are translation there, can I just speak in Chinese about this trends？就是说到那个 ChatGPT 和 AI， 包括突破性的技术，我觉得我可能用中文说的会更清楚一些哈，因为这个就是我们做投资在北京的话，经常还是用中文去交流，所以我不是很清楚的能够知道我是否能用英文去表达。但是说这个GPT， 我经常尤其是在北京的话，我会经常开玩笑说是这个 GPT 其实是学计算机的人，尤其是 大概从20岁到50岁这一代人，尤其是接触到信息化技术之后，这一代人的第二春。我觉得哈，因为咱们知道15年、16年 AI 出来的时候，实际上是对大数据的一种新的处理方式出来了。然后大家其实 AI 就非常火，大家觉得它可以改变生活中的很多地方，就跟刚才其实我们这位嘉宾也提到说，其实iPhone 的出现带动的是更多在不同领域的应用。那实际上 AI 也是。那我觉得计算机相关的，包括 AI 相关的，它实际上是一个系统性的科学，它无法单独产生价值，它一定是平台和系统级的改变。所以在这个 AI 出来的时候，其实我们虽然看到 AI 非常火，但是实际上 AI 到底在哪里落地，到底在哪个产业能够产生新的价值，提升效率，其实这么多年的摸索，并没有我们预期的那么好。那我觉得每一个风口的出现，实际上都是很多投资人，很多我们对技术或者是对这个人类发展技术有非常高的预期的这样的人去推动，但实际上这个预期可能会高过它实际的这个发展速度。所以 ChatGPT 实际上是从技术层面上来讲，是将感知大量的数据的计算效率所以从效率提升的角度来讲，我觉得会带来很多感知数据的这个快速的这种效率提升，会促进很多应用场景的这个更大的价值化。那比如说我们其实之前投了很多在各个应用场景会利用到数据，会利用到计算，去更好的去做它产品这样的方向的项目。那有了 ChatGPT， 它原来感知数据的速度和感知数据的能力和计算推理的能力会大幅度相加，原来需要几个月的事情，现在可能几天、几周完成，那会相应的带动很多产业的发展。但我觉得本质就是回归到商业的本质来讲的话，它一定是各行各业有需求的、有市场价值的，需要通过这个技术来提升效率的方向，才能有应用的方向。那很多人也会恐慌，是不是感知这个就是 ChatGPT 和 AI 的这个感知带来的？反正我认识的，但凡是计算机领域的这个专家，对 ChatGPT 都是很恐惧的，因为他们觉得，所以我其实刚才跟几位嘉宾在开玩笑说，我在来的飞机上，我一直在思考这个问题，就是 ChatGPT 和 AI 实际上让我们人类的计算效率和智慧更加提升，但是它能取代人类吗？可能人并不是要变得更聪明，可能人只要享受生活就可以了。所以我觉得。就是它还是要回归本质，到底在哪里能有价值，在哪里能够去这个产生巨大的价值，我们才能叫颠覆性的技术。那其实回到颠覆性的技术，我们在清华也好，在全国其实看到非常多，比如量子，比如脑科学，比如神经科学。就是如果你把它这个就是去 hypo 一下，把它想象一个科幻电影的话，其实现在很多技术都是可以实现的，只不过说在这个实现过程中，对我们人类最底层的需求到底满足了哪些，才能有价值。所以我觉得其实很多方向都可以关注。像我们的话，主要比如说就刚才说的几个，在存量市场和增量市场上有很多新兴的技术。同时的话，我们也非常关注，就是现在很前沿的技术，比如说在这个脑的科学领域，现在主要还是用脑电。那我们用脑磁可以更就是更细微的观察到很多感知的数据和变化。那可能重新对我们生理的这个脑的状态有个新的认知之后，就会产生很多新的应用方向。所以这些我觉得也是就是非常重要。这些技术看上去非常的微小，但是每一个单一的突破都会带来整个行业的这个颠覆。虽然有的时候是成本很高，需要时间，有的时候呢，市场需要去教育，所以这个每个种类都不太一样。
谢谢刘总。对，因为感觉就如果是一个社会，我们都可以更加享受人生的话，不用那么聪明的话，那也挺好的。
因为我来的路上，其实我觉得就是不用太聪明，可以过得更快乐。
ChatGPT 有这样的好处。I guess what's it yeah, going back to Oscar about just disruptive tech, because you guys, obviously kind of thinking about this as well. So any sort of thoughts on that?
Well, I want to answer this question also in a slightly different way. Not just talking about technology itself and how, but about the disruption potential that technology can have. And that also kind of connects with one of the key areas or key trends that we think in terms of investment is very, very interesting. And that's emerging markets. Emerging markets today represent 85% of the population in the world. A couple of weeks ago, was already like news everywhere that the economy of the BRICS is already larger than the economy of the G7, and that's not including some of the largest emerging markets. We are seeing with the growth in emerging markets, not just in terms of population, but consumption is massive. And there's a huge demand for more services, better quality of everything. And if we continue doing things exactly the same way that things are done in the most developed economies, this challenge of sustainability that Manav was talking about is going to be totally broken. I mean, it's going to be impossible to solve the problem. And that's where I think AI has massive potential. We're not doing AI just for the sake of, okay, we need to be slightly more competitive. It's a matter of survival. It's a matter of how can you offer services to the massively growing population in India or many of the emerging markets where you simply don't have the infrastructure, don't have the services, and doing things exactly the same way they were done in the past, it's just not going to be impossible. It's going to take forever. It's very expensive. That's not an option. So we're seeing huge opportunities there. We're seeing huge opportunities for disruption in terms of inclusion, in terms of the capacity to reduce costs, make things way more efficient. And that is you could think about that already as that's a emerging markets specific type of challenge with solutions that could be very localized. But what I think is very, very interesting, and that's a trend that we're seeing, and I don't think that's going to stop, is how these emerging markets solutions that need to be compliant with all the regulation, with all the functions, and they have extremely tight constraints in terms of cost, suddenly they become very relevant solutions for a global marketplace. So we have solutions working for emerging markets, creating options like just as a viable solution for insurance, where the premium that anybody will pay in an emerging market for the insurance is so low that the current technology will not be able to support. It will not be able to support because the cost of the management of that premium is so high that will make those insurance solutions totally impossible to for economically not feasible, not viable. Once you're able to create a technology that fits all of those criteria, we see how these technologies suddenly become global solutions, and their expansion in more developed economies, where sometimes there's already an education. For example, in the case of insurance, you already have an education. The market knows. Suddenly make the amount of insurable events and the market opportunity way bigger. Because if in the past you could only work on this size of premium, now 10 times lower premium is also viable as a business. And we're already seeing these companies. We're talking about AI, and we're talking about deep tech as some of the trends. No? And for me, one of the companies that I think exemplifies better these two trends plus the emerging markets is one of our companies called VideoBurst, that is a company that if you look at the charts of generative AI startups, they are the most funded video generative AI startup in the world. But what makes them very interesting is that company is profitable. That company today is profitable. They've been generating a profit already for a year. They still get funded, but they use that funding to go and explore for companies that have been focusing too much on the technology, not enough on the business. And they just completed 2 weeks ago their first acquisition of an American company. And that I think is definitely a combination of some of the trends that we're talking in terms of technology, sustainability, localization, expansion, that we think is a new trend that is going to play a very, very important role. And the way things are going and the way this technology is changing how things are now happening in emerging markets, we think this is going to stop. I mean, the penetration in the market, when I told people, no, in Kenya, you have like 85% of digital payments. People is crazy about that. It's like, how? Like, Kenya, we thought there was nothing there. No, 85%. When you see the the kind of changes happening in a market like Nigeria to promote more digital banking, that is the basic infrastructure that is going to be able to enable many services. Because at the end of the day, for a lot of the people in these emerging markets, the use of technology is a need. It's a must to be able to get access to these services. No other alternative. So that user adoption is going to be a very, very important driver of innovation for all of these new services.
Thank you, Oscar. Yeah, I think we only got time for like just one more final. Yeah. So, but I guess what is fascinating is that like things are changing. Things are uncertain. There are a lot of different sort of moving pieces to this whole picture. I guess so. For my final question, just kind of briefly, how would you guys advise, like early stage, entrepreneurs? You guys do some of the incubation and investing in them, and so yeah, just kind of like some brief recommendations and advice that you guys would give to early stage entrepreneurs. Let's start with Manav.
Cash is king now. It's important to figure out how to make sure that you have access to the right capital and you can sustain longer. Look at raising equity, look at grants, look at alternate sources of financing, go on and leverage DAOs and look at alternate distributed sources of financing. Two, I think focus on the fundamentals, make sure you're clear on what problem set you're solving for. If you're a deep tech company, you're clear where the technology will eventually commercialize or that there's a path to capital. I think it's more important than ever to be addressing local needs. For us, three things matter: sustainability, equitability, and inclusiveness. So we love companies that are focused on building sustainable solutions, equitable solutions, inclusive solutions. I think those are the most important areas to also bring us together as a global society and also address some of the biggest needs. We're all privileged to be in the place we are. A lot of people are not, and as Oscar mentioned, a lot of them are just looking at basic sustenance. Technology can be very disruptive and very exponential for them. So I think if you can understand that and see how to support that, the markets are huge, right? And certain markets in Southeast Asia are still booming. Certain markets in like India is still booming. There's still a lot of scope. So focus on your market. Make sure you're shoring up enough capital and play the long game, I think, and build fundamentals into what you're doing. Don't chase valuations. They're definitely not gonna yield this year.
Right. Yeah. So, He Zong, any sort of advice for these kind of early stage entrepreneurs?
Yeah, sure. I will make my answer short. Talking about the deep tech, the startup, and something that we haven't mentioned for a long time, the globalization. I have to say that there is a huge opportunity for the startups here to go global, especially for the deep tech companies. The reason about this is we see some good advance in the technology, especially in China. For example, for the battery technology, the autonomous driving technology, as well as the AI technologies, though also the robotics technologies. Based on those technologies, Chinese startups can really produce some global leading products in terms of the performance as well as the price and the production capacity. So that brings those startups huge competitiveness when they go to the overseas market. And GlobalBrain, as Japanese VC, we see the great potential on those companies. So I really recommend that.
Thank you. He Zong, any advice for startup founders?
So talking about the recommendation, so first thing that I would like to say is doing a startup is not an easy thing. It's very difficult. It's everyday problem solving, and you need to see that others not seeing, and you need to do it for very long term. So usually, the first question I ask about this entrepreneur is, why are you doing this? And what's your motivation of doing a startup? If is making money or seeking opportunities, that I don't think you have enough power to face the difficulty or challenge in the future. So the motivation is very important. Why are you doing this? Is it a value added and a lot of and the right thing that can sustain you to do it for a long time? And the second thing is find the right partner, because nowadays I think both the institute and incubators and accelerators, they are more mature. They get more resources. They know the right road to do the startup at the very early stage. So the right partner can get you a lot of facility to can get a lot of favor to facilitate your business. So find the right partner, and after that is every day you connect more resource, you find more partners to do the right thing, and just do it. Thank you.
Thank you. Oscar.
Good. Well, I try not to repeat too many things, but I want to build on something that I just shared. I think the first piece of advice: take care of yourself, take care of your team, because it's tough. It's gonna get tough. And again, this is a marathon. This is not a sprint. So make sure that you consider at the end of the fight, there's no startup if there's no founders, if there's no management, if there's no team. So first thing is like take care of yourself, take care of the team. Consider that. Second thing is something that I mentioned earlier, but I think is very important, because many founders keep making decisions based on data points that are not reliable. Average, medians, they are not something that you can use. Most likely, in every single case, you need to dig deeper, you need to zoom in, and you need to figure out exactly, for your case, what are the targets, what are the averages, what are the rates that you need to use as a reference. Because right now, differences are becoming bigger and bigger, and you need to be able to really have a reference that matters. And the third one is actually very, very curious piece of advice that I got 2 weeks ago. I was in the US and I was missing a bit Chinese food, so I went to a Chinese restaurant and I got these fake fortune cookies. And in the fortune cookie, it gave me a message that said, chance favors the prepared mind. And I think that's very, very, very important.
Love that.
So everything is going to be slow. Due diligence is going to be slow. But if you are prepared, if you make the work of the investor or your customers or your employees easier by preparing in advance, you're going to have already a huge advantage, because everybody's under that pressure. So every investor needs to make sure that they can justify very well to their investment committees or whoever is going to be auditing what they do. So if you make their work easier, if you're more transparent, if you make the information more accessible, if you help your customers understand how to better get value from your product, how to solve problems, all of this preparation is going to be something that is going to pay off a lot. So those are my three ideas.
Thank you. This is awesome. Yeah, I guess there are a lot of opportunities out there, but it's a slow market. But then, get prepared and then go at it again and all. But so that's about wraps up today's panel. Thank you guys for listening, and thank you guys for sharing the insights and all. So have a good rest of the afternoon.